here Mr. Raveendranath Kamath to speak about startup growth and investment trends. So I'll just give a small brief regarding Raveendranath Kamath. He's an entrepreneur and investor. He is the co-founder and CFO of the Next Education, an ed-tech company providing end-to-end solutions to over 5,000 schools across India and Middle East. He has been investing into startups since 2012, currently heads Kerala Angel Network and is a part of investment committee of Kerala Innovation Fund. Yes, with huge round of applause, let's invite Mr. Raveendranath Kamath to speak with us. Thank you.
This is a bit, I hope you can hear me. Good evening. How many of you love maths? Okay, so I will have a nice session, I suppose. So I'm actually very confused what I should be talking about because I didn't know what the audience is. You can talk about a lot of things. So please stop me from if I'm just going overboard and you want to ask something else. I'll try to keep it to 10 minutes and take questions if you have. Yeah. So I think my first question is, is your business a startup or an MSME, right? Because this is supposed to be a MSME conference. So I was, again, this is a question. So how many of you think your business is a startup? Okay, one, two hands only. And so probably, okay. So I think it's not, so I'll just talk about this brief thesis and then we can look at what works. So if your business is into innovation, right? If you're innovating, if you're developing something, if you're improving any of the three things on the right, and it has ability to do large scale and create wealth and employment, it's a startup. So I think you should probably think slightly differently. I think a lot of you will be actually a startup in the definition. How many of you have heard the term DPIIT, Department of Industrial, whatever, Industrial, whatever, Internal Trade, yeah, Department of. So you should definitely look at their website and see if you qualify, and there are many benefits you can actually achieve. Typical question. So I'm supposed to talk about angel investing or investment trend in startups, right? I think the first question that comes up is, do you want equity or debt? Anybody who doesn't understand this difference? Okay, so equity, you part with ownership. Debt, you part with probably nothing except some peace of mind, right? So when you raise capital, and when we talk about raising investment, you have to think about probably these terms. Sorry, I think this, our friend is blocking you. Can you read? Okay, all right. So I think the most important piece when it comes to startup investment and is probably the third last one. So it's about, are you trying to create liquidity or are you trying to create wealth? I think I should skip that. Now, how many of you relate to this? All right, blank faces. Can we do a quick exercise? Please take out your phones. See, 10 minutes, 15 minutes you're giving me, I should give you something back, right? Hopefully. So please take out your phones, have your calculator ready. I have some books here to be given away as prizes. Whoever cracks it first. The book is about, it's a historical fiction, probably 300 years back, of a person who actually built Kashimat in Bombay. And he was persecuted, mistaken, and so on. So more about that later. Okay. I would like you to look at this chart. Okay? So this is mostly about on the x-axis you have number of years, and on y-axis is the multiple. What are these curves? And why am I talking about all this? Any ideas of what this is? Anybody can explain what this is, or no? So let's think about. Okay, we'll come back to that slide. Any of you understand or can tell me what these blue and red lines are? These are actual numbers, so I think I'll switch it here. Better? So what are the red and blue? We live this every day. It's very close to our hearts. Yeah, but you have to tell me what exactly that is. One is, Yeah, so we get the first winner. Yeah, you can, I'll give you. Okay, then I'll give you both. So, what is...
So I also thought it's about market.
Oh, yes.
I was the first person. Why did you tell me?
But you have to tell me exactly what it
I
is.
told you market.
Yeah, but which market?
Any market.
What number? What is this number?
Okay.
No, give it. So this is, the blue is Sensex. What is the red? Especially this. Gold price, yeah, exactly. Who said gold? Oh, there you go. So let me try to go back now. Make any sense? So I have this lowest line here. It is simple interest. And if you look at the thing, you start with 1 rupee, and it goes up 10% every year. And over 30 years, I think it becomes like 3 times. So your 1 rupee investment becomes 3 rupees or whatever. And all other curves are exponential curves. And I start with 6%, which is our FD return. Right? You get 6-7%. And the middle one, which is the blue one, is 12%. That is kind of the money that return has been given by the market. I mean, typically the Sensex. And the third one represents what we call as a 20% IRR. Are you with me? Right. So what does it tell you? So you look at a 20-year horizon. We start companies, and you have to think of at least 10, 20 years, right? Nothing less than that will work. In 20 years, when you build a business, I think the most important question is, what rate are you able to grow? And going back to this, sir, I'll send you the things. Don't worry, I'll distribute. This is the compounding effect. So you grow 10% every year versus 15% versus 6%. And you can actually see the difference. So if you're growing 6%, which is the red graph, in 20 years, you are at, I think, three times the money. And if you grow at 20% in 20 years, I think it's about 40 times. So your capital grows to 40. This is probably the most important thing when it comes to investing. Now, I would like you to calculate what return this has given. So that's where we need our calculator. Anybody with a calculator? Anybody can tell me if they know how to calculate the return? annualized return. Um, it's very simple and so fundamental that we look at all investment decisions, whether you to. That's easy. You don't have Excel. Not everybody is Excel. No, use calculator. Anyone? So I'll give it a shot. If you take your calculator out and just flip it. Can you try that? It should get a lot more formula driven. So normally you get arithmetic, you get a lot more functions. On, I think, iPhone, I think you have to say scientific or advanced or something like that. How many have it? Look, this is the only takeaway that you will have from 15 minutes of listening to me. So let us say the number is 100,000, starting point is 4,000. So what you have to enter is first do 100,000 divided by 4,000, so which is 100 divided by, some conspiracy going on there. 100 divided by 4 is a 25. There is a symbol called x power y, x and a y on top. 25. Actually, it's 25. 2000 to 2025. 2x power y, and you do 1 by 25. What do you get?
1.137.
Yeah, so 13 is your percentage IRR. 13% IRR. Yeah. So how many are with 13%? No? Yes? Rohit? What's wrong? Huh? That's okay. You're doing over a period of time. It's always never going to be. So 25 to the power 1 by 25. So this 25, first 25 is 100 divided by 4. And the second 25 is the number of years. So 2000 to 2025. So you do 25 x power y. Why don't you try? Not working. No, there is a function called advanced or something like that. You look at the menu. It has to be there. No, not there. Strange. I'm sure it's there. Somewhere it's there. So I'm sure it's very simple. Just take what expectation of return you have and compare it with this. I'll show you another graph. So this is the same data presented in a slightly different scale. And that's a logarithmic scale. And you will see a simple straight line. So why am I talking about all this? So look, we are running businesses, right? So we need to know how fast we are growing. And the growth rate is probably the most important factor. Other than, of course, luck, you have some windfall gains, whatever, right? Most important is, are you able to grow? And when you especially consider investment, think about what growth rate you can do and think about compounding. So far, no, I'm sorry. Okay. So I was specifically said I should talk about show some charts and numbers and trends. So this is just to put in perspective, and then I'll take questions, right? So overall, on an annual basis, I think about 300 billion gets invested into venture. And then I go back and to this favorite slide. Why is most of the funding people talk about going into as equity? And why not debt? I mean, debt is there, of course, but the buzz is about equity and venture funding, venture capital. because the expected return is at least 20%. So you are actually expecting that if things go well, in 20 years, your investment should become 40 times. So when you take venture money, startup investment, return expectation is 25% minimum. You don't achieve it all the time, okay, I understand. But expected return is 25%. It's like somebody's giving you a loan at 25%. It is not small. So if you're thinking you will raise capital in startup way, this is the return expectation. I've only put 20, right? The actual IRR expectation is 25%, which basically doubles in 3 years, 3 times in 5 years. So if you're thinking about, so when you think about this number, so you're talking about 300 billion in investment last year. That is the return expectation that people have, right? Of which, of course, AI is now the hot boiling buzz. 30% of the capital is going there. And you know how much comes to our state of Kerala? 0.01%. No, I think Bangalore will, by far, Bangalore, Maharashtra will. This is Indian number, $1 million. Yeah, this is the number. So about $30 million. That's the investment received in Kerala. It's not much. I mean, 300 billion on one side and 30 is not anywhere. We talk about Kerala. All of you should look at this one website. You should definitely look up there. This is how our state looks like. And especially, please look at the numbers I've put in the bottom. This is real. So there are companies getting huge amount of grants because they're registered under DPIIT and with KSUM, which is a nodal agency. I think there was a session on what schemes are there for MSMEs. If you think your idea qualifies for a startup, you should definitely look at what is available. There are grants, loans, and actually there is even a fund actually set up which will have a corpus of I think about 250 crores to invest specifically into Kerala, and you should definitely look. So ideas generated is like any pitch that you get. Supported will be typically funding happens to 1% companies. So there so supported actually means it is funded. So it's either funded or they have a grant or receive some assistance from the thing and so on. And nowadays there is no value for information, right? So we can only guide you to look where you want to look. And if I have to take one important thing from my life, which all of you should do, how many of you have set up Google Alerts for your business name, your sector, and check what you do? How many of you have heard Google Alerts? Okay, please Google Alerts, right? And set up Google Alerts. You can receive as it comes, daily, weekly, whatever, on your sector, about your company, about your competitor. So, for example, if I have to know what people are talking about me, I can set up a Google Alert, which is typically going to give you on news articles only, right? Of course, you have social media, but this is, I think, far crispier when it comes. I am done. If they allow, I'll take questions. And I don't know if this was what you're looking for. I was very confused what I should talk about. I'm available if any of you have any questions on how to raise money or help is needed. You can always reach out. The committee will have my numbers. questions, if you will allow. I don't know. Okay, so his question is, how has been my experience on investment, right? So I've done probably 20 investments. I would say 4 or 5 of them have completely flopped. One case where somebody ran away with money, and all happens, right? Uh, so uh, there's one company that gave me a 10x return. But in the startup investment world, there is something called the power law. So power law says the investment that gives you the highest return will do much better than all other investment returns combined. So that's typically how it works. The odds are stacked completely against you. So I think uh, it was a software, dental practice management software in the US, SaaS. So in the Indian context, what rule SEBI likes everybody to put through fund mechanism now if you want to do startup investment. Then there is something also qualified investor criteria or accredited investor, which says you should have either 2 CR income a year, or there has to be some X amount of net worth other than your primary home and all that. And so this typically you will not. SEBI does not want retail investors to go there because it's super risky and unpredictable and super illiquid. So you make an investment, typically you have to wait 7-10 years for any money to come. So all your losses are front-loaded, so you get losses first, wins later.
So, investor perspective during COVID, what was? So, my question to you is: on 2021, you show the investment graphs are highest, right? What was, from an investor perspective, what was the reason for this particular thing? It was COVID time, and so was it the market speaking? The startups were better. Investors were
I
investing
think
more money.
people were stuck at home. There was probably a lot more, it went into a slightly different kind of a curve, right? So some of the companies really took off. Some of the companies really went down. And if you look at US, most of it is driven by US. They printed a lot of money. So everybody was given a paycheck. And where is all this money going to come? It, if you're receiving handouts and you don't have a way to spend them, then typically you will go and invest, and typically all of it gets pulled into a fund. And I think
COVID was a funding summer.
yeah, I think that was it. And then there were
Was it also indicative of some kind of inclinations towards SaaS investments or
No, I don't think so.
Software investments?
So the buzz keeps happening. Now there is AI.
AI.
So I think it's basically stories. So startup is nothing but stories, right? Like Akka here, right? So it's about selling stories, right? Whether you're able to sell the story to a customer, your investor. Okay, so question is, what do I look for, or what do angel investors look for in a startup? Um, uh, I'll give you textbook answer. No? Okay, actual answer. The team, whether this guy has tenacity to run for 10, 15 years, taking all the onslaughts, you heard the panel, all sorts of opposition that you will get, resistance you will get. Can you face that and run 10, 15 years? That's the first question. Is the person capable? So person. So 70, 80% is people. Then probably you will, then textbook question answer comes TAM. What's the addressable market? Is it scalable? But I think it's mostly about the team and the conviction of the team and whether you believe that business will scale. See, business will always change. I'm all of us are sure what we start with is not what you end with. So whether the person has the capacity to go and do it. I am being kicked out.
Big round of applause, please. Come on.